Greetings everyone, Joseph James here with your nightly newsletter brought to you by theschooloftrade.com. Today was September 10th, 2009, a Thursday here, and of course Thursday brought jobless claims this morning. We also had a Bank of Canada announcement just before the 9:30 open. Another one of these days here, still in transition between our summertime trading and our fall market price action. And of course, before we show you guys the trades we took today in the room, I want to remind you guys we have a free resource online. Please visit our YouTube page /School of Trade. When you're there, guys, please subscribe to our page so you get all the updated videos, and then rate and comment on this video. All right, guys, today we took one trade in the room today. One trade was pretty early this morning. Pretty slow day overall in the market. We'll show you guys what we saw, though. Of course, one trade, 13 ticks on the crude this morning. That brings our weekly total to 520 here on a Thursday. And, of course, our monthly total to 730 here in the month of September. We will continue to keep you guys posted as we move forward. Now, of course, all these trades are called live in real time, so come out and join us tomorrow morning at 2:45 a.m. Now, the term of the day today is the pace of the tape, or what we call the pot, the pace of the tape. Now, what is this? This is a technical indicator. It's a proprietary indicator available to all of our lifetime advanced members of the School of Trade. Now, what it does is it quantifies the speed of the tape. So it actually is considered to be a speedometer, right, for the time and sales window. So it quantifies the speed of the tape. Now, we use this very handy tool for our entries and our exits, and it's actually the speed of the tape, right? It's the pace of the tape. It quantifies how fast the tape is moving. We use it for entries and exits to identify market sentiment, and it gives us three very basic colors, red, yellow, and green, and it's extremely easy to use. Now, when you guys join us in the live trade room tomorrow morning at 2:45, you'll see a snapshot looks just like this. We have multiple time frames, slower time frame, faster time frame, and some medium time frames. We also use our time and sales window and this pace of the tape indicator, which of course you can see in the lower left-hand corner. We've got red, yellow, and green pace of the tape bars, or what we call pot bars. As you guys know, volume is always very important to us with the James Wood method of trading. And of course, because of that, the pace of the tape indicator comes in handy every single trade of the day. Now guys, let's talk about the live trade room. Opens up tomorrow morning at 2:45 a.m. Eastern Standard Time for trial members and lifetime members. We'll trade the European session at 3 a.m. We'll trade the U.S. Open at 9:30, and we'll finish up about 12 o'clock, 12:30, just after noontime. We're going to show you guys how we go through very simple three jobs. That is identifying, adjusting, and executing. We'll show you guys how we qualify our trades. We'll go over our rules, and we'll show you guys how to stop thinking so much and let our mechanical rules, which are very easy to follow, let them do the trading for you. Let's talk about some of the trades we took today. Now, as you guys know, only took one trade this morning, happened just before 4 o'clock this morning. And as you guys can see here, I'll zoom in. This, of course, is on the crude oil futures, symbol CL. This is the 1009 contract, the current front month contract. Now, just before 350, 349 here on the crude. This is a two-step long. 72.19 was our entry here. Of course, we had to wait until we got above this blue line here, which I believe at that point was at 72.13, 72.14, somewhere around there. So basically what we had to do was we had to wait for price to get above that blue line that marked our most recent swing high. Once we got above that swing high was resistance. Now it becomes support, and we're going to use that support to protect our position. We took our first target at 3 ticks, took 2 contracts off, half a position at 3 ticks. We moved our stop up to our point of entry to lock out all that risk in the trade. We took another target at 6 ticks, right? Put one more contract off at 6 ticks, and then we, of course, managed our position to take a final contract off on our runner at just 1 tick, just before the market came back and hit our stop loss, which would move to our point of entry. Now, I want to show you guys this particular setup on this two-step long, a great example of how we use this pace of the tape indicator. Now, I'll scroll down to the bottom here. Just before that 350, about 348, right, 347, we began to see these spikes in volume, right? In other words, the speed of the tape began to increase dramatically. Now, as you can see, these are nothing but red pace of the tape bars. This is one example of how more aggressive traders can get into these trades by using the pace of the tape. Even if we're seeing low, slow price action, we can use this pace of the tape to identify whether or not price is increasing in speed or decreasing in speed. So of course, when speed is increasing, it gives us a lot more confidence to get into this entry, and that's exactly why we took this trade. Had plenty of room for it, made some good money, right? 13 ticks, 10 bucks a tick, that's 130 bucks on one trade there. And again, we use this pace of the tape indicator to tell us when the speed of the tape was at its point where we wanted to get in. This is what it's going to look like when you log into the trade room tomorrow. Okay, so here's a live snapshot of exactly what was going on when we took this trade. Now, as you can see, on the left-hand side, I've got my trade management chart. This is a very fast time frame that we manage our trades with. In the middle here, I've got my fast time frame. This is where, of course, we look for price patterns to develop. We take our trades. And then moving over to the right, you'll see a combination of slower time frames and medium time frames in the upper right-hand corner. Lower right-hand corner, you've got your time and sales window, and then your pace of the tape indicator all the way in the lower right-hand corner. So let's go back, of course, now to the trade itself. 349, we got long after we broke above, right, that 72.13, 72.14 area, which was, you can see that red arrow down there, that swing high. Now we have a swing indicator that actually labels those or marks those swing highs for us. You can see those blue lines there, those horizontal blue lines there. Those are all the swing highs. Now all we needed to see here was to see some increasing speed of the tape, make sure the rest of our rules lined up, which means we had to see some follow through above that 72.13, 72.12. And so what happened was we waited a little bit longer to see that speed pick up. Price action sped up. We saw some buyers at the tape there. And of course, we got into this trade. Entry, of course, right, at 19. We took our first target at 3, our second target at 6. And then we were in a position where we had to make a decision. Did we want to, of course, let the trade work its way out and take us out at our entry? Or do we want to use our technical indicators to decide when to get out of this trade a little bit earlier for more profit? Now, this is a great example of how once we got into the trade, we quickly saw our first 2 targets filled. So the trade was a winner no matter what. We moved our stop up to our point of entry at 72.19. And of course, as you guys can see here, price then came right back down. Now, we knew at that point that we were probably not going to make much profit on this final runner, right? Price went up, filled our targets, then began to come back down. Now, when it began to come back down towards our position of entry, we had to make a decision. Are we going to let this thing just simply run us over and take us out of the market at our point of entry for no more profit on that runner? Or am I going to, of course, use my technical indicators to give me an idea of when I should be getting out early to make sure that I don't give back that profit to the market? Now, we have a very mechanical way of doing this. On the left-hand side of your screen here, you'll see at 72.14, we have a thick pink line there. We use that to trail our stop. But in this case, at 72.14, it wasn't above our entry point yet. So we didn't have the ability to trail our stop anything higher than our point of entry. As you can see, 72.14 on this trade management chart, our entry being at 72.19, we didn't get the opportunity to really trail that stop because it was below our point of entry. Now, because we hadn't the ability to trail our stop, we then had to make a decision as far as if we wanted to get out manually. Like I said, normally we're going to simply trail our stop using that pink line on our trade management chart. But in this example, we didn't have the move there. We didn't have the opportunity to do that because our trailing stop level at 14 was below our entry point. So I'm not going to move my stop down. I only want to move my stop up for a long trade to trail and to lock in profit. So what we did in this situation was we followed our rules, and as you guys know, we have 2 technical indicators we use. The first thing was this MACD indicator, another proprietary indicator developed just for James Wave traders at the School of Trade. This MACD, when we see the market curl over, right? In other words, the MACD indicator begins to curl. The moving averages here begin to curl and point down. We see, of course, the histograms go from above the 0 line, below the 0 line. That's a definite heads up that this move to the upside is coming to an end. Now let's go all the way to the other side of the picture here, all the way to the other right-hand corner, lower right-hand corner. At the same time, we also saw the pace of the tape decreasing. So combine this, a decrease in the speed of the tape, that signifies obviously the end of a move, right? When price slows down, we expect to see the move start to exhaust. So of course, when the speed of the tape decreases, that shows a sign of the end of the move, which means now is the time to take profit. When we saw that MACD indicator curl over and point down, that also signaled the end of the move. When we saw both of those happen at once, it gave us the heads up we needed to take that profit early. And of course, what happened was, took the profit just before entry, made one more tick. Now, it wasn't a lot of more money, but what happened very shortly there was price actually deteriorated and tumbled on us. Okay, so once again, we used these indicators to decide when we wanted to get out of the move a little bit early. And of course, in this case, it made us money because of it. Now guys, come out tomorrow morning and I'll show you guys how we use this stuff live in real time. We'll show you guys how we use all of our indicators. And again, I want to remind you guys, 2:45 tomorrow morning, 2:45 a.m. Eastern Standard Time is when we open up. We'll trade any market, guys, any liquid market. We'll give you guys a free 3 weeks as part of our trial. And before you come join us, make sure to grab a copy of that beginner's course, right? It's essential for all you free trial members. And guys, please rate and comment on this video. My name is Joseph James. For more information on lifetime membership, please drop us an email at sales@schooloftrade.com. And as always, thanks for your time. We'll see you in the room tomorrow morning. Bye-bye for now.